So, you've heard the stories. People are supposedly making incredible amounts of money trading crypto futures. The idea of earning an extra $100 a day sounds pretty good, right? For just a few minutes of work, you could potentially add $3,000 a month. Before we dive in, let's get something straight. This is not a get-rich-quick scheme. The goal here is a simple, repeatable Bybit plan. It's designed for learning and managing risk above all else. This is not a promise of profits. Trading futures is incredibly risky. You can and probably will lose money when you're starting out. Think of this as a blueprint for a very cautious approach. The premise is built on structure and discipline, not on hitting home runs or making wild guesses. This method needs just a little time each day, about 10 minutes to check charts and place a trade if conditions are right. Before you even think about making a single trade, you absolutely have to understand what you're dealing with. So, what are Bybit futures? In the simplest terms, a futures contract is an agreement to buy or sell an asset, like Bitcoin, at a predetermined price at a specified time in the future. However, for our purposes as day traders, we aren't concerned with holding the contract until it expires. We are simply speculating on the short-term price movements. You're essentially betting on whether the price of Bitcoin, Ethereum, will go up or down. If you think the price will go up, you go long, buy a contract. If you think the price will go down, you go short, sell a contract. The main feature that attracts people to futures trading is leverage. Leverage is like a loan from the exchange that allows you to control a large position with a small amount of your own money. For example, with 10 times leverage, you can control a $10,000 position with only $1,000 of your capital. But leverage is a double-edged sword. This is why we will start on a Bybit demo account. To aim for a $100 daily target, we need a strategy that offers enough opportunities without being too slow or too stressful. That's why we're going to focus on day trading. This style sits comfortably between the high-frequency chaos of scalping and the slow pace of swing trading. With day trading, we aim to open and close our trades within the same day, typically using the 15 or 30-minute time frames. You can identify a potential setup, place your trade with predefined exit points, and then walk away. We are going to use just 3 simple time-tested indicators: moving averages to identify the trend, relative strength index to gauge momentum and spot entry points, and volume to confirm the strength of a price move. These tools are standard on every charting platform, including Bybit and TradingView, and they are more than enough to build a robust trading system around. Let's break down the tools. We'll use 2 exponential moving averages, the 50-period EMA and the 200-period EMA. Think of these as our trend filter. A good trading plan is defined by its rules, especially the rules for entry. Our setup is based on a simple 2-step process. First, identify the trend. Second, wait for a high probability entry signal within that trend. If the 50 MA is trading above the 200 MA, the market is in an uptrend. In that case, we are buyers. If the 50 MA is below the 200 MA, the market is in a downtrend. Then we are sellers. Assume trend, but do not buy anywhere. We wait for a pullback, a temporary dip against the main trend. Specifically, we look for price to pull back toward the 50 MA. In an uptrend, we want the RSI to dip to around 40.45. When RSI hits 40.45 and starts to curve up as price tests the 50 MA, that's strong confluence. Final piece, price action confirmation, a bullish engulfing, a hammer, or a decisive green close near the 50 MA. Ideally, volume increases as that bullish candle forms, confirming buyers are stepping in. Recap. First, 50 MA greater than 200 MA. Second, price pulls back to the 50 MA. Third, RSI dips to 40.45 and turns up. Fourth, a bullish candle with supportive volume. Only when all 4 conditions are met do we consider entering a trade. If your entry strategy is how you make money, your exit strategy is how you keep it. A proper exit strategy consists of two components defined before entry: your stop loss and your take profit. A stop loss automatically closes your trade at a specific price if the market moves against you, limiting loss. A take profit closes your trade to lock in gains when price reaches your target. Using both is non-negotiable. They remove emotion when it matters most. For longs after a pullback to the 50 MA, place your stop just below the recent swing low formed during the pullback. Use a fixed minimum reward to risk ratio of 2-to-1 to set your target. If entry is 28,000 and stop is 27,800, risk is $200 per unit. A 2.1 target sets TP at 28,400, a $400 gain. On Bybit, open your position and input TP and SL in the same ticket to create a bracket order. Once set, your job is done. Do not move your stop further away and do not get greedy by lifting targets. Let the market hit SL or TP. We have a setup and an exit plan, but none of it matters if you get this next part wrong. Position sizing determines whether you survive. Risk only a tiny fraction per trade. For beginners, no more than 1% of the account. With $5,000, 1% is $50. Forget leverage. Focus on the math. Position size depends on distance between entry and stop. If distance is $200 and your risk is $50, position size equals risk divided by stop distance. That equals 0.25 Bitcoin. Leverage does not set risk. Stop loss and size do. Leverage only affects required margin. A 0.25 BTC position at $28,000 is $7,000 notional. Keep leverage low, 2x, 5x. High leverage like 50x or 100x risks liquidation on tiny moves. Risk $50, 1%. With 2.1 reward to risk, a winning trade nets $100. Some days there's no setup. Other days, you'll take a $50 loss. Over time, small risk and favorable reward stack the math in your favor. This strategy is designed to fit into a busy schedule, not take it over. All you need is a consistent 10 to 15 minute window each day to execute your plan. Higher activity around the London or New York Open can provide cleaner moves, but crypto is 24/7. Adapt to your time. Step 1. 2 minutes. Scan major headlines for big announcements, regulatory news, or protocol updates. If there's an FOMC or major token unlock, consider sitting out. Preserving capital is your #1 job. Step 2. 5 minutes. Open the 15-minute chart. Check if the 50 is above or below the 200. That sets buy or sell bias. Scan for a pullback to the 50 MA and RSI around 40-45 for longs. If a setup is not forming, close charts. Do not force trades. Step 3. 3 minutes. If valid, define entry. Place stop below swing low. Set 2.1 target. Size the position to 1% risk. Submit the bracket order. Double-check numbers. Once orders are live, the work is finished. Close the laptop and let the plan do the work. Let's walk a complete example with a $5,000 account, $50 risk, and a 2.1 target on ETH USDT. The 50 EMA trades decisively above the 200 EMA. We are buyers in an uptrend. Price pulls back toward the 50. RSI dips to 43 and starts to flatten. Selling pressure is easing. A 15-minute hammer forms and closes near the 50. Our price action confirmation. Entry at 1,625. The hammer's low is 1,615. Place stop just below at 1,614. Stop distance is $11. Risk $50 divided by $11 equals approximately 4.54 ETH. For 2.1, target is 20 toes above entry. Take profit at 1,647. Submit the bracket order. Long 4.54 ETH at 1,625. SL 1,614. TP 1,647. We walk away. After consolidation, buying resumes and price pushes through $1,647. Bybit closes the position at TP. $22 times 4.54 ETH equals $99.88, approximately $100 for the day after minor fees. We've covered theory and a full example, but consistency is everything. Use a simple, non-negotiable checklist. Print it, put it on your monitor, treat it as law. Discipline separates consistent traders from gamblers. First, check the news. Second, apply the trend filter with the 50 and 200 on the 15 mem or 30 meters. Only trade with the trend. Third, be patient for a pullback. Fourth, watch RSI 40-45 for longs. Fifth, require a clean candle trigger. If any condition is missing, there is no trade. Before entry, set stop below recent swing low. Set TP at minimum 2.1. Calculate size to risk only 1%. Keep leverage low at 2x, 5x. Do not interfere. Let TP or SL get hit. If you hit your daily loss limit, stop for the day. Live to fight another day. $100 a day comes from boring, repeatable discipline. Win a little, lose a little less, let the edge compound. Practice in demo until it's second nature. This is a starting point, not financial advice. Protect your capital.